Hello everyone. This video is going to cover exercise 14.8b, preparing a schedule of cash payments for your inventory purchases. So we've got Glendo Grocery buys and sells groceries in a community far from any major city, and the owner budgeted the store's purchases as follows. So required purchases in October, November, and December. Basically, this is looking at another example of what we did in exercise 14.7b, and they just started with this bottom amount. So that's what we would have found here. That's how you get these required purchases. We're doing all of those purchases on an account, and the suppliers requires that 70% of the accounts are paid in the month that you make the purchase, and 30% is paid in the month following the purchase. All right, so for October, we know we've got $21,000 in accounts payable, and then we paid off $7,500 from previous accounts payable, so that would have been from September's accounts payable, for a total of $28,500. All right, so now we need to do November and December's. So the first thing we need to look at is how much of the current month are we going to pay off? Well, they tell us we're paying off 70% of the current month. So we start by taking 22,500 times 0.7, and then that 40,000 times 0.7. When we do that, we end up with November paying off $15,750, and in December we pay off $28,000 of our accounts receivable. All right, so now they're telling us that we need to now pay off 30% of the previous month. So we're paying off what's left. So in October, we paid off $21,000. So you can do this one of two ways to figure out how much is left to pay off in November. You can either take your $30,000 and subtract the $21,000, or you could take your $30,000 times 0.3. Either way, you're going to get $9,000 left to pay off. So we have to pay off $9,000 that was left from the month of October in November, and our total budgeted payments for inventory in the month of November then needs to be $24,750. In the month of December, we find that we have to pay off $28,000 of our current account, but we still have to pay off what's left of our November account. So in November, we paid off $15,750. So again, we could take that $22,500 and subtract your $15,750, or you could take $22,500 times the 30%. And again, either way, you're going to find that you owe $6,750 left from November's purchases that you're going to pay off in December. When you put all that together with the $28,000, you find that in December, you make payments of $34,750. So that's your schedule of cash payments for your inventory purchases. For Part B, we then need to determine the amount of accounts payable the store will report on its pro forma balance sheet at the end of the fourth quarter. So we know that we paid off October and November, and we paid off November and December. So what we have left is what we have that we haven't paid off from December. So we had $40,000 on an account in December. We paid off 70, so that means 30% of it is left. So when you take that times 0.3, we find that we have $12,000 left in our accounts payable at the end of December. And that is exercise 14.8b.